Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, it's been smooth sailing for stocks on the back of solid economic data, but Morgan Stanley's Chris Toomey sees volatility ahead. And later, price cuts and increased supply have the obesity drug market booming, but questions remain on who's picking up the tab for the miracle medicine. We begin with our expert panel on three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Elizabeth O'Brien, and Al Root. So, Ben, the leaders stumbled this past week in the market, and yet the troops marched on, and it wasn't a bad week.
Yeah, no, this was Nvidia week, and it was, everybody was watching what the earnings would be like. The market kind of freaked out a little bit ahead of it, and then the earnings came out, and the S&P 500 finished the week kind of flat, just up 0.2%, even though the stock dropped 6%. And I think that's really what's going on. The market here is looking at other things. The tech stocks, they did not do well. The Magnificent Seven, it didn't do well. But you had energy, financials, materials. They finished higher. And you ended up with a week where the Dow was at a high, the NASDAQ was down, and the S&P was flattish.
The Fed's preferred inflation gauge came in, confirming the story that, no, it's not coming down as fast as we'd like, but fairly nice clip, and that looks good for the market. Yeah,
it's at 2.5%, so no, it's not 2 yet, but it's heading there. And I think with that number, what we can see is that, the Fed the trajectory is right. And so the Fed can start looking at other things, and we do have other things to look at.
There seems to be some debate as to whether the Fed would move 25 or 50 basis points a quarter or half a percentage point. I don't see why they would do a full half. That could spook the market, but I guess there's some people think they might.
There are people, and I think the reason is partially because you listen to the Fed speakers talk, and they're talking about the so-called neutral rate, basically where rates should be to sort of keep the economy functioning the way it is. Don't do any harm, don't juice it at all, and it should be about 4%. That means that rates are quite a bit higher, and so you could see doing half a point. But I think you're absolutely right that people would say, "Whoa, what's going on? Why are they doing this? What do they know that we don't?"
Right. Okay. Let's talk more about Nvidia. Al, Ben said they had good earnings and a lousy performance.
Yep.
They literally doubled earnings. A company that huge, that's incredibly unusual, and yet investors sold.
Yeah, the numbers with Nvidia are amazing, right? And the stock was down about 8%, but again, it's up 100% over the past, or 150% over the past 18 months or something like that. This was the fifth straight quarter where revenues were up more than 100%. First time they topped 30 billion. Over the last 12 months, just under 100 billion in sales, up almost 200%. The numbers continually get amazing. I do think, but it starts to generate these questions of how long can this go on? The one thing that I find fascinating, 4 companies account for about 40% of sales, roughly speaking. That's Microsoft, Meta, Amazon, and Alphabet. Or if you rearrange those, it's the MAM.
The MAM, right? Yep.
And 40%, and those 4 companies are going to spend more than $200 billion on capital and equipment, basically building this AI infrastructure out. That's up 5-fold since 2017. Again, the numbers are just amazing.
But it may not be sustainable. Could we see a situation where you had Cisco in 2000, and literally that stock has not gotten back to where it was on March 31st, 2000.
Well, that's the fear.
24 years.
Good news, bad news, right? So Wall Street forecasts more growth in capital spending by the big 4 in 2025. So not yet, right? Maybe we were in the 1998 and we're not in 2000. Cisco in 2000 traded for about 20 times sales. This is the bad news. Nvidia right now is trading for about 20 times sales.
Okay.
So, these things can't go on forever, and we're not saying that this is the end, but you do have to, basically, I would say people should watch the capital spending levels at those big 4 to see what's going to happen in Nvidia.
All right, real quick, a lesser name but a bigger fall, Supermicro got hammered this past week.
So Supermicro, that actually accounts for about 9% of Nvidia sales. They make servers. There was a short report that came out, basically questioned their accounting. Then the day after, they delayed their annual report. So the stock was down almost 30%. It's down 65% from its high.
Wow. Elizabeth, I want a very different subject here. You wrote an article about a controversial proposal backed by Kamala Harris to tax ultra-wealthy people in a different way. Set us straight, because there's some misconceptions about this.
There are, indeed. Yes, Silicon Valley is up in arms about this proposal. They say the tech gurus say it'll stifle innovation. But as you said, there have been a lot of misperceptions. Now, they're not coming after anyone at this table and the unrealized gains in our 401ks, right? This proposal would target...
Speak for yourself.
Oh, well, all I am making assumptions. All right, maybe you are a secret bazillionaire, but if not, this is going after people with wealth of 100 million or more. So it's not a new capital gains tax. What it is a sort of part of a complicated effort to ensure that the ultra wealthy pay a minimum income tax of around 25%. It faces long odds as well. In order to, even have a chance of becoming law, we would need Democrats in control of the House and both chambers of, the White House and both chambers of Congress, and even if it were to pass into law, it would likely face serious legal challenges.
Yeah, I've heard from people in the legal field looking at finance that it may very well not be constitutional.
Right.
And there are other ways to address this issue. I mean, the big problem here is that people pay themselves a salary by borrowing against this wealth, so it's never actually realized. They actually deduct the interest on that borrowing.
Right. So the ultra wealthy pay effectively a lower rate
or
than
zero.
Or zero. Right.
Okay. Well, we'll see what happens.